Sean Kester, the man, the myth, the legend. First of all, you are not only a legend in now venture capital, helping really shape, I think, what the future of the VC side looks like, where you're really helping organizations go to market, and you're not just cutting checks, but you help build one of the legendary SaaS companies in sales tech, sales loft, and you worked yourself. I think you started off as was it a BDR maybe?
Yeah.
And just like ended up being a VP running partnerships. Welcome to the show, my friend.
Thank you, George. It's good to see you. Excited to be
Absolutely. Absolutely. Well, let's dive into partnerships, because that was kind of the latest sort of thing that you've been focused on. And oh, by the way, is there something touching the microphone?
No.
Okay. For some reason, there's something. Okay. I just wanted.
Hang on. Let me see. Let me make sure. Is the mic coming out of my? Make sure it's coming out of the.
Oh, okay. Was that the table? Maybe it's the table. Is it a table?
Is that better?
Yes. Yes. That is better.
Okay, cool. Yeah. Now it's coming out of my my AirPods.
Okay. All right. Cool. Awesome. All right. We'll just pick it up.
Sweet.
So let's talk about partnerships. And I think there's a couple reasons why partnerships are so huge right now. We've been trying to figure out moats, right? In a world where AI is largely building a lot of at least application layer software, right? Back in the days, like we had to hire a bunch of software engineers, and that was really a competitive moat. And I think like that is certainly thinned and potentially continues to thin over time, to thin out over time. And I think that, we've been thinking about how we can use other go-to-market motions, let's say partnerships in this case, to kind of develop that mode. From your perspective, kind of what's one of the biggest shifts that you think founders should make to really kind of get partnerships and that channel into something that is strategic, meaningful, and that they're going to be willing to invest in?
Yeah, absolutely. So, I think one of our theses with how we invest is that we always want to find companies that have a high propensity for partnerships. And so, time and time again, we find founders that have the desire to do it. But I think one of the big things they get wrong is that they're not building the product and the go-to-market for partners. And so they're what a lot of times you'll do is that you build a product, and then you'll say, hey, let's go add a partner stream on top of this. You've got go-to-market, which may be direct, like, hey, let's just include partners, but you never taught your sellers how to sell with partners. Your product doesn't have something that can support a third party selling it or reselling it. And so they have to become real revenue drivers. And the founders have to accept that if this is my channel, that my product pricing and onboarding and roadmap must serve that channel.
But if you're a founder out there and you're thinking about this, right? Because a lot of the time I think channels and partnerships are kind of like this afterthought, and it's like, oh, let's do that later on. How do you start to justify early days to start to go down that path, to start to think about, okay, here are our primary channels, but we're going to build, XYZ features with the idea that maybe number one, in the short term, we're going to start to spin out channels. And number two, like really be able to impact the functionality here in the short term. So it's not just something that's duct taped together in some, poor way.
Yeah. I mean, it's just got to be architected from day one. I think that's got to be something that and most of the time it isn't. That's the problem. And when I say day one, I mean, once you start to have mature systems and programs. So, if you need to go get some revenue at first, you can go hack some processes together and make sure that you've got, a model at which, at least you can float the business. But, once you start to scale and create repeatable revenue and create those big systems around it, hiring multiple people, having, a more sophisticated product, those things have to be thought about with every decision made. And it doesn't mean that necessarily you need to hold roadmap on your product on day one to build those things, but it's got to be architected in a way where you can support those down the line. Same thing with your sales systems, understanding that, if you build these processes in place and if everything is very tied to singular people or processes internally, then it's going to be really difficult to add a partner into that equation later down the road.
And how do you start to, for the traditional kind of B2B founders out there, right? Sales leaders, how do we shift that mentality to say, like, it's no longer a secondary thing. You need to do it now. And just one other thing I wanted to add to that is I start to think about kind of how consumers have been purchasing through distribution channels. Like I don't go to Atlanta,
Yep.
your old stomping grounds, right? And I walk up to Coca-Cola Corporation, right, and buy a can of Coke from there, right? I go
Yeah.
through a distribution channel, and I think that as we've talked about the consumerization of B2B software and these sort of things, it just makes sense that we have to, from day one, have a channel kind of approach. And I know we've said this a couple of times, but for the psychology to break the old school thinking, how do you start to have that board level kind of
Yeah.
founder level conversation?
Well, I think this probably ties into some of the biggest like myths that I think founders believe in partnerships. And I think the one that I see the most is, if we sign the right partner, the deals will start flowing. Like that's just not true, right? And what's not going to happen is very much likely your best partner is going to be the one that you didn't see coming. It's going to be the one that best aligns with your organization. They have a similar maybe mentality around selling, similar values, and those things aren't going to be discovered until you get deep into the processes or you start to see how you work together. And when you start, understanding that if you sign the right that the right partner is not just going to have, or excuse me, the right big partner isn't just going to bring in deals. You'll stop wasting time and chasing those logos, chasing platforms, brand names. The quote unquote strategic alliance that never happens, marketplace listings, press release partnerships. And then you realize that those big partners don't move the revenue, but the people inside those organizations do. And so you have to learn how to work with the people beyond just the executive you're aligned with, to make their life, their number, and their status is better overall, and be able to kind of go after a singular motion together.
So I think for the CROs out there thinking about this topic, I think we have to take it seriously. We have to have co-selling efforts. We have to have the infrastructure, right? Like how many times do you see product marketing or whoever's dealing with like content or collateral creation on the
Yep,
marketing side internally say, oh, you know what, just use these brochures or whatever one pagers, decks,
for
etc.,
sure.
for partners. And we all know that like we just can't send that stuff over to the partner and expect them to kind of figure it out on their own, or that those kind of, use cases or the messaging right on that collateral even
Hmm.
resonates.
Totally. I mean, I think, partners don't send deals, partners adopt motions. A partner only becomes revenue when a specific role at the partner changes how they scope projects, changes what they recommend, changes how they price, changes what they demo, changes what they get paid on. And until all of that happens, you don't really have a partner. To your point, like you have a PDF.
Makes sense.
Yeah.
Hard stop there. Yeah, absolutely. Right.
That's
Yeah,
right.
I love that. I need to take that as a quote here. So okay, so are we talking about now pretty early on saying, okay, if I'm a CRO out there or I'm a CEO or founder and I'm thinking about this, I am now saying, okay, well, like a significant amount of my time or the resources and effort have to be allocated to partner enablement, and we have to create this content, we have to create training programs, because I think that's one of the biggest things. I've very rarely seen smaller organizations or startups being able to deploy or even like think about partner enablement programs. So we spend a lot of time training our internal teams. How do you know when it's the right time to actually like deploy that training stuff? Even let's just talk about early stage when maybe you haven't quite right sort of refined it
Yeah.
internally, and now you're like, all right, well, we got to enable a third party.
Hmm. I mean, the programs come after you figured out, what works, and then you have a problem scaling it, right? So you don't need to start and architect something that is super complicated, but I think you need to have someone whose job it is to make sure that partners are successful. And that could, a lot of times that starts off, in the early days, it could be an account manager, someone who just has a good relationship with that partner, who has probably the better relationships with the customers, and that role can evolve into a partner enablement. And I think, a lot of times you have to have someone doing it, and it's got to be painful enough to scale. A lot of times I do see the kind of the opposite of that, where I'll see organizations that have really intricate partner programs. They make it really, there's a lot of steps involved into getting from, hey, this sounds like a good idea, to like, okay, now you've got your certification, we're allowing you to go sell this stuff. And then in those partnerships fail because there's too many steps to from the early day. And it's like the partner's looking at you and saying, hey, you're a pretty small company. Like I'm going out of my way here to build some trust. You're making me jump through a bunch of hoops in order to get access to the things I need to enable like my customers and to make those referrals. And so I think you can make it too elementary. You can make it way too complicated, and trying to have like someone handhold, from the early time, in order to figure out what is needed, like the bare minimum, is the right place to start.
All right, I want to deviate from partnerships for a second because not
Okay.
only are you a friend, but I've respected you tremendously, and you've done so many things professionally that are mind blowing, including building. Again, as I sort of said, I mean, for all of us who have built companies over the years, building successful companies, particularly in sales tech, is probably one of the hardest categories on planet Earth. So I wanted to talk a little bit about your transition from being this day-to-day operator builder to now investing. Like, what was that experience like? What motivated or inspired you to make that transition? And are there any sort of like gotchas or sort of things that maybe you didn't see before getting into the investor seat?
Sure. Yeah, I mean, so being on the other side of things is really fun. I find it really fulfilling for a lot of reasons. But just going back to why the transition there. So my two partners, Josh and Justin, they were at a company called Lead MD, and they were partners of SalesLoft back in the partnership days. So one of the things that in Revenue Capital, which is where I'm at now, is different from a lot of the VCs, and we're kind of type or we're kind of asymmetrical in that, is that we're all operators beforehand. So we knew what it was like to operate a business, to grow a business. Between the three of us, we've had 5 successful exits. So we've seen what that side looks like, and we know, especially because we were focused pretty heavily on the go-to-market and partnership side, like what those motions look like and what good looks like. What we also saw in the market was that there's a gap between the value that most VCs were giving, especially for early stage founders and teams, and money, right? So they would give money in, and then not a lot of them had operating experience. And usually a lot of those companies have something that's viable that people are buying. We have product market fit, but they don't have go to market fit yet. So they don't know how to scale up and be able to put the gas on those processes. So our value add, specifically, we call it operator immersive capital, is that when we invest, we get hands on with each one of our portfolio companies, usually spending around 20 hours a week. And that could look anything like building playbooks, helping, hiring, managing their CRM, anything from that statement or that perspective, especially around partnerships and helping get those motions together, so they can ultimately scale.
Well, I wanted to talk a little bit about the product marketing function and,
Mm-hmm.
specifically the idea of like early days. You're talking about finding product market fit, right? So like a lot of organizations will do that. And I think, like, in my experience, the first product marketer and person that's thinking about messaging and positioning and all those sort of things, so effectively like product marketing kind of
Sure.
tasks or jobs to be done, is the founder, is that early team.
Should be.
If
Yeah.
right, it should be, right. If you're out there and you're looking at founders who kind of fit the ideal kind of profile of the type of founder that you would invest in, are they doing that kind of, like, how do you know they're doing the right kind of product marketing stuff? Like they're actually doing that work and carrying the bag? Because I know that's part of the thesis, is that you don't just want someone who's just got a great slide deck, right? You are focused on working with founders who are in the trenches, who get it, who know the messaging, who know the positioning, who's
Yep.
figuring that stuff out, but also getting deals.
Yeah, I think it's a good question, because founders are still pitching. A lot of founders are still pitching like it's 2020, and and investors, we're underwriting like it's 2026, right? So there's a mismatch of good companies, and they're kind of dying in the fundraising front. They maybe get to seed round and they're struggling with A's. We're seeing a lot of bridge rounds happening, because we want to see revenues, right? So
Mm.
what right now, it's a handful of things that we look for that really brings, a founder will break through. The first thing is proof of revenue, systems, not just revenue, right? So being able to prove that you can repeat that revenue, and not just, hey, we've got 5 million in ARR. We've got a way to get from 5 to 15, and here's how it's going to work. And this is how we were successful doing it. Second piece is having a really sharp ICP that is painfully specific. So we invest specifically in vertical SaaS, and they have to have a very defined ICP. And a lot of times they may say, hey, we want to sell into dental and into, I don't know, something else, specialty medical. But we're not a veterinarian, for example, right? Like, well, we like to cut your ICP in half. We want you to only sell to one because you want to be focused on the message in the market and be trained for that motion. And eventually we can scale those things out, but we want to be hyper focused on where they're building that revenue. I think evidence of leverage and not just hustle. So like high revenue per rep, closing fewer deals but bigger deals, product doing pre-sales work, things of that nature where they can prove that they've got a way to continue to build on that momentum. One of the things I look for specifically in a founder is a founder market obsession. So not just vision, not just background, not just passion, but pure obsession where they can live inside that customer's world. They speak that language. They understand the buying politics. They can predict their objections. They know the budget psychology, right? Like they know that space inside and out, and they're hyper focused on uncovering all the pain points needed so they can enable their teams. And to your point, like they can really be those product marketers. And then finally, just any strategic constraints. So we don't like it. You know, a lot of founders are surprised by this. Like the best raises right now often include strong no's. So who they know who they're not selling to, or who they're not building for, or what channels they're not going down, and what growth they're not trying to take. Like having a founder who can come and say, hey, listen, I'm trying to raise this money and here's what I'm not going to raise for. Like we have to align on all those ideas. And so saying no, founders saying no is a green flag.
I wanted to get your perspective on AI because one of the things you also spoke to around product market fit, and that's not enough, right? And that it feels like that these days building product also with the LLMs. I mean, I've just seen multiple products this week that just blow my mind, Sean. Like
Yep.
folks who have been like non-technical folks, sales people like me and you, right? Who, well, I don't know if you write code, but I don't. And
Right, good.
right, who built things that look like
Yep.
3-year-old mature products, right? That took 20 engineers, and they built this stuff in like a week in Lovable, right? Or
For
whatever
sure.
LLM they use. I know Lovable seems to be the one I've been seeing lately. So if now we're talking about product market fit being harder to hold on to, right? Also because like that competitive moat from a product perspective is sort of all over the place, right? And then you talked about also like the go to market fit being kind of the key. I'm hearing that, I was just talking to our buddy Max. He's like, brand and go to market fit is like your real moat, right? So
Yep.
what are we talking about in terms of valuations and how we think about, from an investor perspective, how we think about deals that are coming to your table now that maybe, don't have the same sort of competitive advantages as we might have seen in the past?
Well, I think that's just it. There has to be a component of AI within each product now, and I think just from a technical perspective, like that is necessary, and it doesn't have to be like the next open AI, but the things that they do, they serve for their customers, need to be enabled through AI. And then I think on the flip side of that, their teams need to be leveraging AI to do their jobs better, and I mean that across the board, right? If your teams, like internal teams across every department, aren't leveraging AI in some form or fashion in order to do their jobs better, they're going to fall behind very quickly. Not only are each of those individuals going to fall behind, but those organizations and the teams themselves are going to underperform based on comparables in the market. And so, if you think about what AI really changes, especially for those go-to-market teams, anything that's like repeatable or text-heavy or research-driven, maybe rule-based or reactive, is getting crushed into software, right? It's not slowly, it's fast. So all those things are very repeatable. So things like prospecting and outbound production, CRM hygiene, some of the machinery internally for programs. But I think the places where humans keep that edge are things like judgment under ambiguity, right? So understanding the nuances of a deal, trust, and building emotional conviction with your buyer. Like AI cannot take over those things, and so that's where you can have your teams level up. And then architecting those revenue teams themselves and the pieces that go in there. Like AI can't do those things, but again, you've got to kind of leverage all of that. And so when we look at companies, looking at it from a product perspective, of course, but when I look at them from a valuation perspective and propensity to invest in, I'm looking at how their teams are leveraging those things in order to get above their competitors in their market, and then where they're focusing the day-to-day efforts of their actual human teams in order to level those things up.
So you might look at a deal and expect to see certain systems automated, right? For
Yep.
a lot of reasons, but certainly capital efficiency and so on,
Hmm.
being able to move quickly, but also from the perspective of, hey, we need to have AI functionality within some capacity in the product where it makes sense. It doesn't have to be thrown in there just to be able to check a box. I think
That's right.
folks can kind of smoke you out pretty quickly if it's disjointed, right? And
Right.
we've seen a lot of that. I think as we've been sort of evolving through this era over the last, let's just call it 3 or 4 years. That makes a lot of sense. I was talking to an investor the other day who said that he was on a pitch call with a founder, and the founder was like, "Yeah," going through some of the details. Said, "Yeah, we hired a mobile app development agency," and the investor was like, what are you talking about? Like, why would you spend whatever the
Hmm.
cost was, 50 grand on building this thing through an agency when you can basically vibe code what he was talking about? And he just said, like, at that moment he realized that the founder was missing the operational innovation internally to, like, I guess basically one of his points was that it's no longer just building product externally, but it was also like, how do we build or reimagine the way we build companies internally using AI?
That's right. That's 100%. I mean, things are moving so quickly that if it's not something that you're actively practicing and focusing on internally across all of your systems and all of your departments, you're going to get so far behind by the time you try to invest in it.
Awesome. Sean Kester, thank you so much for being on the show and sharing your wisdom. If folks wanted to learn more about your fund, maybe there's a place that they can go to maybe learn about a little more about the requirements and the kind of deals that you're looking to potentially invest in, and then also, like, the right founders. What are the best channels or URLs to kind of do so?
Yeah. Well, you can always find me on LinkedIn. That's the easiest place to get in touch with me and anything that we're doing there. And then inrevenuecapital.com is the name of the firm, and we've got a ton of info on there. But always welcome to have a conversation.
Awesome. Well, have a great day.
Thank you, George. Good to see you.